Hello, folks. Welcome to this week's edition of the Satori Traders Market Pulse newsletter. Let's jump right into the charts. We're going to start with the daily of gold. Last week, we were suggesting or considering the possibility that gold had completed a wave 4 and was about to start on wave 5, and of course that's exactly what happened. I mean, sometimes you get lucky. So we got our wave 5, and the next question becomes, is it complete? Obviously we got a big overthrow, so I was suggesting that gold might pop up and test the median line as resistance, and then I was expecting some sideways action or maybe a little bit of a pullback. Instead, we got a real strong push or spike up through that median line and almost up to the 200-day moving average. We're only a couple of bucks shy of the 200-day. So big move there. What would be super bullish is if price was able to stay above both this horizontal, this is the 1810 to 1820 zone, stay above that level and then stay above the median line of this pitchfork as well. So that would be super bullish action there. The indicators, MACD, obviously we've got MACD in bull mode, suggesting that the trend is up. We're on a buy signal. Energy is very high and rising. We're looking at higher prices based on this chart. We're looking at higher prices in gold. The only question is, what happens immediately after that big push? Since we were talking about 5-wave movements, and let's look at the 5 waves. So here's our origin down here coming out of the double bottom. So this would be wave 1, 2, 3, 4, 5. Now in commodities, the 5th wave tends to be the big wave. In most vehicles, wave 3 is the big wave. In commodities, for whatever reason, it's more likely, higher probability that the big wave is wave 5. So that wave could be complete or may have some room to run there. And of course, the 200-day moving average is going to be strong resistance. So anyway, nice move in gold last week. If we look in silver, same kind of story. Big push higher in silver last week out of what we were suspecting might be a bottoming area. And so in silver, it's more obvious that price has pushed up above a resistance level and could be heading higher from there. Certainly MACD bull mode on a buy signal, very elevated energy from the stochastics. So silver chart certainly suggesting higher prices to come. This prior high looks like it's 28, and so round number at 28, top of this next median line extension on this, that's a shift pitchfork, and 28. That would be my next target in silver. We'll see what happens there. Let's look at the mining stocks. This is GDXJ as proxy for the mining sector, and we're in the weekly time frame. And my main thing in this chart that I'm watching is the idea that we've seen a behavior change, that the mining stocks have shifted from an obvious downtrend to a couple of months of a sideways grind or shuffle, and now we've transitioned into a new behavior mode, which I believe is bull mode, up mode, prices going higher. And so far, this chart is continuing to confirm that. We've got energy rising. Looks like we got a new MACD buy signal from an oversold level. So MACD very oversold and now appears to be headed higher. So looking good there in the weekly time frame. In the daily, we got nice action last week in the mining stocks. And then in Friday in particular, we got this bullish gap. So price gapped off of, there was the close Thursday, there's the open Friday. So big gap higher, and significantly a gap over this horizontal we would have expected some resistance here from this prior high, and instead what we got was a gap over that level, and by the end of the session Friday, price closed above that level. And so very nice action on Friday. In Japanese candle terms, you might look at that doji as asking the question, is that a bullish or a bearish doji? And I would say that it's bullish in this case, and I'd point at the rising volume. This is very bullish, high energy. Investors are coming in, they're buying shares of GDXJ. We've got a new MACD buy signal. MACD's in bull mode. Energy is elevated and rising sharply. So all indications are prices are headed higher. Just happens that we have to deal with resistance at this median line. Bullish action is to maintain this horizontal support level, and even more bullish, get up over the median line here. So, but looking good there in GDXJ. Let's look at SIL, the silver mining stocks. It's a little bit more obvious that the Friday was a gap up over resistance and then found support, or appears to be finding support above that level. So again, I would interpret that as a bullish doji candlestick. We can see the surge in volume. New MACD buy signal, energy elevated and rising. If we look at, okay, it's making a bullish move, what's our next target? Oh, I zoomed out too much. And I noticed that we have this open gap. And of course, price doesn't like open gaps. If you can think of it as a vacuum, and price gets sucked into an open gap because it's a vacuum. And so I would expect this gap to be filled in relatively short order, which coincidentally is almost up at the $48 level, a round number. And so it wouldn't surprise me to see price get pulled up, fill this gap, and then also it wouldn't be surprising to see a spike up to 48. Maybe not a sustained move, but a spike and a pullback. But closing that gap seems pretty sure thing in SIL at this point. Let's divert now and look at some individual mining stocks. Let's start by talking about the mining sector in general. And kudos to Crescat Capital. They produce some very good charts and information, always good information coming out of Crescat. And so thank you, Crescat, for letting us share this chart. And the point of this chart is that the mining sector is profitable today. We don't need higher prices for the miners to be profitable. I don't want to get down into the details, but the all-in sustaining cost for most of the gold miners is $1,100 or so. Some of them as low as $900. And so you look at a gold price of $1,700 an ounce compared to an $1,100, that's what it cost me to produce that ounce of gold. That's $600 an ounce, pure profit. It's cash flow. And the mining sector is one of the few sectors right now that has legitimate cash flow. You know, there's lots of companies and sectors that you can point at, and on a gap adjusted basis, yeah, it kind of looks like they might be profitable. And of course, you know, their PE ratio is 40 or 50 or even higher on some of them. But somehow, you know, your financial advisor tries to rationalize that. Anyway, mining sector is actually profitable without playing bullshit games. On to individual stocks. Enough of me blabbering. I did a video yesterday morning on B2 Gold. Max G had asked about that particular company. And so if you're interested in B2 Gold, give that video a look. It's on the channel. The summary or what we got to is in the daily time frame, it looks like we might have the start of a third wave, and that wave could easily take us up into the round number at $6. We have this open gap, again, talking about open gaps getting filled. So a fill of that open gap, and then we're in a rock's throw of the $6 round number and that upper median line extension. So wouldn't be surprising to see $6 there. Energy elevated and rising, bull mode. We got a new buy signal on Friday. So anyway, B2 gold is looking good. Thanks for asking about that one, Mac. Check out the video if that's of interest to you. So I'm watching the U.S. listed mining stocks in particular because I want to see, one of the things I want to see in this new uptrend is that mainstream retail investors get interested in the mining stocks and start to buy stocks like this, Avino and Alexco. And so maybe starting to see that last week. Obviously not seeing super bullish movement. And of course, while that's not what we'd really like to see, it also means we still have an opportunity to get involved if we choose to. And don't get me wrong, I'm not suggesting these two particular vehicles. I'm just looking at them. Avino is interesting in particular. This big price spike, this was the silver squeeze back in the games when GameStop was being squeezed. We got a squeeze in silver, and this big spike happened in Avino. And so I suspect this is scary. That spike is going to scare investors for a little while, but this stock is cheap. If you're looking for a cheap way to get involved in the silver sector, this would be a candidate. There are far better silver stocks, but retail investors don't do their due diligence. All they know is, hey, this is a silver stock, it's cheap, I'll buy it. And again, I'm not recommending either Avino or Alexco. I'm just looking at them. Newfound obviously got carried away last week. The last time I was suggesting that we might consider buying the stock, it was down here. And now we've had three weeks of very big runs in the stock. Obviously got carried away in the middle of last week and then a big pullback. But Newfound, they appear to have a very big, rich gold deposit. When we look at what is the possibility of mining stocks, so this is Kirkland Lake Gold in the monthly time frame, and the only reason we're looking at this stock is I want to show the potential. So Kirkland Lake, it was a penny stock. So here it is at $1.30. This is July of 2015. Well, Quentin Henney discovers, I believe it's the Swan Lake District. It's got Swan in there anyway. Quentin discovers a big rich gold deposit. And so here we are 6 years later. This penny stock is now, after a big correction, down to $32. Here it is at 40, and in my estimation is currently targeting 55. So we'll see Kirkland back at 55 in this current up leg would be my guess. And I don't have a position in Kirkland. I'm not interested in a stock at that price personally. But the point is, this is the potential in gold mining stocks. $1.30 stock becomes a $40, $50 stock in just a few years. So that is the potential for Newfound. They're going to be listed on the New York Stock Exchange this year. Widespread access. Investors will have easy access to this mining company. They've currently got 10 drills drilling. Clearly an aggressive growth company. And that's the potential. NV Gold, now it's a penny stock. See, it's still a quarter. We're on the OTC market, so this is U.S. prices and U.S. investors with access to the over-the-counter markets have access to this stock. It's a quarter a share. We're seeing some nice volume coming in as the current up leg kicks into gear. Nice to see some volume. We've got MACD coming back up into bull mode, energy elevated. These are some of, I was looking this morning, it's like, okay, why why does Brian like this stock? And so there's my alarm. I'm watering the lawn. Why does Brian like this stock? And here's just a quick list. So they're doing the project generator model. So they go out and they find highly prospective or secure highly prospective gold mining land. They develop it to the point where there is clearly something going on that land, and then they joint venture it or, somewhat sell it with a royalty stream, maintain the stream of income from production on that land. And so anyway, I like the project generator business model. They just completed one of the joint ventures just in the last month or so with Hochschild, if I'm pronouncing that company correctly. And so that's clear evidence that this company is actively working. They're on an aggressive growth path. Quentin Henney is a director, so not only does NV Gold benefit from his experience as a geologist and discoverer of rich gold deposits, he's also a savvy businessman, and having him as a director of the company is a good thing. They're operating in Nevada, and so as U.S. investors, it doesn't get much safer than that. It's a this is not a U.S. listed company. It's a Canadian company operating in the U.S., so operating in one of the safest mining districts in the world, Nevada. Long history of favoring gold mining. It is tightly held. They've got, I think as of today, there are 84 million shares fully diluted. Management holds about 20% of those shares. So not only is it tightly held, management has a vested interest in the success of this company. And so NV Gold is one to consider, assuming that you're interested in both penny stocks, clearly at a quarter of a share, this is a penny stock, and then it's over the counter. So, it's over the counter and there's a heightened level of risk in investing over the counter stocks. So just be aware of that. If we look at, this is the corporate presentation for NV, and you can go out to their website and find it. And so couple of things to look at here. So currently they've got 14 projects working in Nevada. They just completed a joint venture with Hochschild at Sandy Gold. If we look at, there's the share structure. So we got 27 million in the float, insiders holding that. Eric Sprott's an investor, institutions. Anyway, you can go look at their corporate presentation. It's good. And it clearly demonstrates that they are actively working the property that they control, and that they are working in known gold trends. Here's the Cortez trend, Walker Lake trend, Carlin trend. They're looking for gold in the places where gold has been found before, which is always a good strategy. Let's see, we got one more mining stock. This is Lion One. And it's been a little bit frustrating watching it bump along here. This is basically the $1 level, and it's just been, sideways grind here for a couple of months. But now in the last 2 weeks, we've got this rise in volume happening. What I noticed this morning is that we've got a bullish divergence between MACD. We can see that for the last couple of weeks, MACD has been gently rising as price just bumped sideways. And so that's a clear divergence between price and MACD. And divergences are bullish. They don't always, but they can mark the end of trends. And so in this case, it would be the trend would be downwards or sideways. This divergence could mark the end of that trend and the start of a new uptrend. Stochastics also rising gently for the last full weeks, and now could be on a sharply rising uptrend in energy. We got a new buy signal, sharp increase in MACD, a little bit of an uptick in accumulation distribution, but obviously the really bullish action is that price bar. we're quickly running into resistance, or what we might expect resistance up here. Looks like that's about $1.12. I would expect to see, or what I would like to see, is a push pretty quickly up into the 200-day moving average. So, but nice action out of Lion One. That's it for the mining stocks. Let's move on now to the dollar. This is in the weekly time frame. I was watching on Friday. This is in the daily time frame. I was watching the dollar on Friday. It spent most of the session sitting right on support at this median line, and then at the end of the day puked and dropped lower. And so in my mind, that was a very bearish move in the US dollar on Friday afternoon, that dropping below this median line that had held as support throughout the session. Obviously, we got a new MACD sell. MACD's in bear mode, suggesting that the trend is down. Energy clearly turned down sharply. What I had suggested last week is that this looked like a counter trend rally in the dollar. We had this steady downtrend, a quick and sharp and impulsive counter trend movement to correct the downtrend. Price was unable, or the dollar was unable to make it through that resistance level, and then took a sharp, just, pooped the bed. And that's a very bearish move downward. So I would expect that to continue. More downward action in the dollar. This is the dollar in the weekly time frame. Same thing. Energy continues falling. MACD is in bear mode, rolling over like we might get a sell signal. Hasn't happened yet. Push below. We might have expected some support along this median line of the blue fork. Obviously, we've dropped below it now. Interest rates. This is in the weekly time frame. Obviously, last week we got a pullback to our 38% Fibonacci level that we had identified before. And then that's also this horizontal support resistance zone. Interest rates popped right back up, which suggests that was just a test of support. The test was successful. We're clearing the way for higher interest rates. Nothing in the indicators to think that we wouldn't be expecting higher interest rates. Let's look at the daily time frame. My first thought when I saw this candle on Friday was manipulation, that basically some entity was trying to break the uptrend in interest rates, and came in big buyer of bonds on Friday in an attempt to break the uptrend. Another possibility is that the jobs report really was a surprise to some people on Friday, and that this was traders inappropriately or mispositioned. They were on the wrong side of the trade Friday. They were expecting a bullish jobs report, and that's not what happened. And to reverse their position, they created that's a very bullish candlestick, super bullish in my estimation. So going forward, I will basically ignore that spike occurred. I won't use that spike low to draw any Fibonacci tools or Andrews pitchforks, because I view that spike as unnatural, whether it's blatant manipulation or traders reacting to the jobs report. In my opinion, we can ignore that spike. Other than it's interesting that it occurred, we certainly want to pay attention to the fact that it occurred. Equity markets, it's just, you can't see it, but I'm sitting here shaking my head. It's like, how high can they push these markets? In my opinion, this is strictly a monetary effect. The U.S. Fed is pumping $120 billion a month they claim that it's not directly into the financial markets, but, BS. So $120 billion a month into the equity markets, and then another $40 billion a month into the mortgage markets. So why do we need to put $40 billion a month into the mortgage markets? I don't Well, I do understand that. But so anyway, we can't lose sight of the fact that this is a monetary effect. There is no underlying economic strength that justifies equity markets at this level. Here's the 200-day moving average. I'm being cute again this week. So the 200-day is camera shy, and so it's only willing to poke its little head up onto the chart. Let's keep moving. The Dow, again, how high can this market push? I'm not even going to guess at what's our next stopping point. I didn't think we'd make it through 34.3. Nasdaq, this is kind of cute. So I've said it twice, I think, during this video. Price does not like open gaps. And so in the last week, we got this very bearish, this is an impulsive downward move. Price puked downwards and created this big open gap. And we've got 3 more days of generally downward action. On Friday, equity markets bullish move, and so we got this bullish gap higher, but the end result by the close of the session, what we got is a doji candlestick that filled that gap. And in my estimation, that is a very bearish candlestick. Having a doji candlestick fill a bearish gap, that's like at least double bearish. And also note that it's happening below obvious resistance. So there's the 20-day, and then we've got this horizontal, somewhere in there's support and resistance. And wherever we draw it, this price action is occurring below that resistance level. So that's very bearish action, in my opinion. Still in bull mode on MACD. So MACD suggesting that the primary trend still up. Clearly, we're on a sell signal in MACD. Energy down in the tanker, although could be headed up. Brent got a bullish move last week, bumped into the $70 round number, which of course stopped the last uptrend, put us into this sideways bump for the last couple of months now, not months, I'm sorry, last couple of weeks. Bumped into 70 again, pulled back, but all signals go, and now we have all 3 moving averages in bullish alignment at this point. Oh, and let's move back. I think I'd noticed that in at least one of the other charts. What was I thinking of? It was silver. So notice here in silver as well, let me get that out of the way, that we've got all 3 moving averages in bullish alignment now. And what that means is, here's the 200-day, the 50-day is above the 200-day, and the 20 is above the 50. And we could argue that they're all pointing up. Very, very subtle uptick there in the 50, but I believe it is there. So that's bullish alignment. When you hear somebody say, what is bullish alignment, that's what they're referring to. Folks, I've gone way too long. Have a fantastic week going forward. It could be interesting, or it will be interesting, to see what the metal markets do after last week's bullish action. I'm looking forward to it. See ya.